Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning. And I look at positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. And those setups can be taken any number of ways. For example, the S&P 500 setups can be taken with futures, ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord, as well as the chat in YouTube for your questions and comments. Please feel free to post, and I will do my best to answer your questions. All right, my agenda for today, Thursday, November 2nd. I want to cover news items, economic data, events, and earnings for today, the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then we'll take a look at the live market. And when I get to the live market, if anyone has any questions or stocks they want me to take a look at, please let me know, and I will be glad to do that. All right, let's start with news items. So yesterday, of course, with the big event for the week, maybe for the month, was the FOMC meeting announcement. And there was quite a bit of up and down movement after the meeting began, the press conference, and eventually resolved to the upside, and that continues today. And really that's just a continuation of the rally that began on Monday with the drop in implied volatility. We'll take a look at a chart of the VIX in just a few moments, and we'll see that has been helping to drive the rally higher, this put Vanna rally, which may be running out of steam. So again, we'll talk about that more in a few minutes. So today, Apple reports earnings after the market closes. And then on Friday, tomorrow, the jobs report. This is the October jobs report that comes out at the first Friday of the month. That's at 8:30 a.m. Eastern Time. And then there's PMI data at 10 a.m. All right, so that is the news. All right, let's talk about positional analysis now. I'm going to start with the S&P 500. So this is the ES futures in Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to start with the SPX 30-day 1-hour chart. Let me point out the key turning points. So most recently, this was the October 20th expiration. Very negative gamma, called put dominated. The expectation was for a put Vanna rally. That did not happen. Treasury yields were rising. Geopolitical events were helping to push the market lower. Then last Friday, traders loaded up on puts. There was a sharp spike higher in volatility. We'll see the VIX in just a moment. And that has been unwinding ever since then for about a 200-point rally from the low of the day on Friday until today. 200-point rally since the low of the day again on Friday until today. All right, let's take a look at, so here's that. This is Monday. This rally began as VIX was dropping. So a brief pause for the FOMC announcement meeting, and then a sharp move higher after the meeting, the press conference, and continues today with a large gap up to around 4,300. And now it looks like SPX trading, making its way above 4,300 to the SPY 430 call wall. So we'll take a look at that in just a moment. Let's take a look at VIX now. And then I'll get back to this chart and point out the daily key levels. So here's VIX. This is last Friday, the sharp move higher in VIX. And that has been unwinding ever since then, providing a huge tailwind for equities, put Vanna rally. All right, let's get back to the SPX. Take a look at the levels on the chart. First of all, the lower and upper weekly expected move shown by the dashed purple lines. That upper weekly expected move may be difficult to see. SPX is trading well above that level. The dashed blue lines are showing the lower and upper daily expected move. SPX also trading above the upper daily expected move. All right, those are both based on the options market. That information should be available in any trading platform that has an option chain. The weekly expected move is only updated once a week. I update the daily expected move every day. All right, let me point out the Spotgamma levels on this chart. These are the Spotgamma key daily levels. They're proprietary Spotgamma levels based on gamma weighted open interest. Excuse me. So the first level is the put wall at 4,000. That's the strike with the largest net negative gamma that can be expected to act as support. Note that level did drop lower from yesterday. It was at 4,100. It's been at 4,100 for a while. Dropped lower to 4,000. So unlike recent days, the put wall really is no longer in play, and now the call wall, which I'll point out in just a moment, is more in play. All right, so the next level up is the volatility trigger. That's at 42.25. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, like SPX is trading right now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. All right, the next level up is 4,300. That's the absolute gamma strike. That's the strike with the largest absolute negative and positive gamma that can, it was noted as resistance in the Spotgamma AM Founders Note today. And note that level did move higher. Yesterday, the absolute gamma strike was at 4,000. So the highest concentration of gamma weighted open interest yesterday was at 4,000. That moved back up to 4,300, kind of more of a logical level in between the put wall and call wall. And then finally, the call wall at 4,400. That's a strike with the largest net positive gamma that can be expected to act as resistance. All right, so those are the Spotgamma key daily levels, also the weekly expected moves. So SPX on a tear higher. And we'll talk more about the put Vanna rally in just a moment. All right, so this is the 30-day 1-hour chart. Now let's take a look at a shorter time frame, SPX, just to see the levels in play for today. Bring this in just a little bit. So here's the upper weekly expected move, right around 4,200. SPX well above that level. Here's the volatility trigger, 42.25. That level also shifted higher from 4,200 yesterday. All right, then the next level up, there's the 4,300 level, the absolute gamma strike, again noted as resistance in the Spotgamma AM Founders Note. All right, so that's the SPX. This is about a day and a half chart, 1 minute chart. All right, let's take a look at Bookmap now. So in Bookmap, I have my own cloud notes. And I have SPX levels on this chart. There's the 4,300 level. There was quite a bit of consolidation around that level. And that was a price target for the setup that I'll talk about from this morning. The next level up, the SPY 430 call wall. So I have SPX levels, SPY levels. Note both the Spotgamma levels are noted as with white background, red text, white lines on the chart. Also have ES levels, the big round number levels, the zeros and the 50s. All right, so the levels in play for today. First of all, pre-market SPY 425, that's the large gamma 2, also 0 gamma level for SPY. Then around the 427 level, that was the launching point for the setup that I'm going to talk about this morning. The target for that setup was the 4,300 level. Again, price consolidated around that level for quite a bit. And then the next level up, the SPY 430 call wall. All right, so those are the levels in play for today. For the S&P 500, I talked about shifts in levels for SPX. Volatility trigger shifted higher, put wall shifted lower, and the absolute gamma strike shifted higher. Overall, a bullish bias for the S&P 500 based on those shifts in levels. For SPY, the volatility trigger also shifted higher. Put wall also shifted lower. The call wall shifted higher from that kind of an odd number yesterday, 423 to 430 today, and you can see it right there. And then the absolute gamma strike remained steady at 420. All right, so again, overall, my interpretation of the shifts in levels for the S&P 500 was bullish. All right, let's take a look at NASDAQ now. First of all, the NQ futures in Bookmap. All right, first of all, let's take a look at QQQ levels. So again, I have my own cloud notes, so I can show QQQ levels, NDX levels, and NQ levels on this chart. All right, so let's go first of all and isolate the QQQ levels. Take a look at a QQQ chart. So it looks like a big part of the move higher was pre-market for QQQ. Let me point out a couple levels on this chart. Here's the 360 level, and 360 is a large gamma 1 level. The gamma levels are ranked from 1 to 5, 1 being the most important. And then it's not shown on this chart for some reason, but 362 is the 0 gamma level. All right, so that's the QQQ levels. And for QQQ, the only shift in levels was the volatility trigger shifted higher to 355. So QQQ is trading well above its volatility trigger. Well, let's take a look at NDX. And really no NDX levels in play for today. NDX is trading above its volatility trigger as well as above its call wall at 14,600. All right, and for NDX, there were no shifts in levels. All right, let's go back to Bookmap now. So again, I have my own cloud notes, and this is how I look at the both the S&P 500 and NASDAQ through a lens of these levels. For QQQ, for NASDAQ, NQ, I look at QQQ and NDX levels, as well as the NQ round numbers. And then for the S&P 500, I look at that in terms of SPY and SPX levels. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. I like to look at this every day to get a sense of how market makers may react to changes in price and implied volatility. And I'm looking at gamma notional for SPX, SPY, NDX, QQQ, RUT, and IWM. And really, the only one that I don't pay any attention to is NDX. It's so small, it is just not significant compared to all the other numbers. All right, so for the S&P 500, SPX, SPY, gamma notional, negative at the beginning of the day. This means that traders are long puts, market makers are short puts. In a negative gamma environment, they have to trade with price to hedge their delta exposure. And these numbers did become less negative than yesterday. So gamma notional has been increasing or becoming less negative since October 30th. All right, so this shift toward positive gamma is continuing, and certainly tomorrow the SPX gamma notional may even become positive tomorrow, given the move higher today. All right, so that is SPY, SPX. For QQQ, also negative. For RUT, IWM, also negative. All right, let's take a look now at the Vanna model to get a graphical representation of what I'm talking about. So this is the Vanna model. This is for SPX. Let's zoom in on this chart. What this chart is showing is delta notional on the vertical axis. This is market makers' delta exposure. And price shown on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional changes with changes in price only. And the purple curve adds implied volatility to the equation. That shows how market makers' delta notional will change with changes in price and implied volatility. And that change in delta with a change in applied volatility is the Vanna effect. All right, so I've talked about this every day this week. This has been a put Vanna fueled rally. Earlier this week, SPX was way up here on this curve as price was increasing and implied volatility was dropping. Market makers' delta notional was decreasing, and they could buy back their short futures. And at a certain point, that tailwind ends, and I think that that may be close at hand. All right, so let's take a look at some prices now. The low of the day for SPX was right around 42.70, and that was at the open. Notice it's at the bottom of the curve. There really is has not been much of a Vanna tailwind today, although VIX has been decreasing. So at really around 4,300, that Vanna fuel, put Vanna fuel, is gone. And notice as price starts to increase, market makers' delta notional will start to increase, and they will have to start selling futures as price rises to hedge their delta exposure. So this is on the positive gamma portion of this curve. So at this point, for a rally to continue from an options perspective, traders need to start buying calls. And when traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. So it looks like, at least today from this chart, it looks like the put Vanna fuel has pretty much been used up. And that certainly fueled a powerful rally, like I showed on the 30-day chart, a 200-point rally since the low of the day on Friday. All right, let's take a look at some current prices. All right, so SPX, right around 43.11. So I've already showed that. So SPY, right around 430. So here on the kind of the low end of this curve, and as price continues to increase, market makers will have to sell futures to hedge their delta exposure. Take a look at QQQ, trading right around 363. Around the same position on the Vanna model. All right, so based on the shifts in levels higher for the S&P 500, also the continual move lower in the VIX, my thesis for the day was bullish. All right, so let's take a look at some setups now. First of all, I want to take a look and see what options traders have been doing today. So everything that we've looked at so far, other than Bookmap, has been based on static data. All the planning that I've done, that I've talked about, my positional analysis, is all based on static data that's updated once daily. This is based on gamma-weighted open interest. Open interest is updated once daily. That's what Spotgamma uses to develop their levels and models. And that information is available to Spotgamma subscribers early in the morning. All right, so this is real-time data now. So What I'm looking at here is the hero signal, hedging impact real-time options. So this chart is showing price for SPX and the hero signal. Again, hedging impact real-time options. That's showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. I'm going to zoom in on this chart. I'm going to highlight one setup from this morning. This is right around 10:15 a.m. Right here. Notice the hero line. Traders were initially fading this move, taking negative delta positions, and that turned around right around 10:15. I'm going to quickly take a look at puts and calls. So what this is showing, traders started buying calls, they stopped buying puts, started selling puts, and price reversed higher. Back to the total signal. All right, so that's the setup that I'm going to highlight here. So let's go take a look at Bookmap. All right, so that's the setup that I want to highlight. And as I was looking at it closer this morning, let's actually zoom in. Sorry, I thought I'd turn that off. Try that again. All right, let me check for questions. All right, Truman asks, can market go up if traders don't buy more calls than puts? If the market is very negative gamma, yeah, the market can do anything. And I'm not sure I understand your question. So the market is not, I would not classify, first of all, I would not classify the market as very negative gamma. It has been, the negative gamma has been becoming less negative every day for the last few days. So I would classify the market on October 30th is very negative, and even October 27th is very negative gamma, and today much less so. All right, so my point was that put Vanna fuel, all of that negative gamma, that put domination has been slowly decreasing. VIX has been dropping, and those puts are losing value. Market makers can buy back their short hedges, and that according to the Vanna model today, that could come to an end. So at that point, as if you're bullish, what you would want to happen is traders to start buying calls to continue to fuel the move higher. All right, I'm not sure how to pronounce your name. Please, can you explain again gamma and what you see at this, how this helped you? So that's what I'm talking about. That's what I've been talking about all day. So if you want more background information, I suggest going to spotgamma.com and taking a look at the free resources. There's a very substantial help center there. Also, Spotgamma has a great YouTube channel. So let me, I'll refer you to those resources. And Ethan asks, what is a popular charting platform that supports good order flow footprint charts as well as this Bookmap? I don't know. I use Bookmap. And I do use Thinkorswim and Tasty Trade for options trading, but I use all Bookmap for all of my visualization. All right, Joel says NinjaTrader. Sorry, I'm not familiar with NinjaTrader. Bookmap is what I use. All right, so let me talk about this setup. So we saw the turnaround, and traders started right around 10:15, started buying calls, selling puts, and the turnaround in the hero line. So both the call line and the put line were going in the same direction, up. Spotgamma has pointed out that was Spotgamma has pointed out that's a very bullish signal or a very strong signal when both lines are going in the same direction. So let's talk about this setup now on Bookmap. So right around 10 o'clock, traders were there were a lot of aggressive sellers. The volume dots show market buy minus sell. Magenta dots indicate there are more sellers than buyers. Green volume dots indicate more buyers than sellers. Magenta dots on the way down, aggressive sellers, and note the high liquidity here. This is a history of the limit orders in the order book. Below price, those are limit buy orders. Price never quite reaches those levels. Some level, it looks like some traders came in and were front running that level. So the volume dots shift from magenta to green. Aggressive buyers start to come in. There are a few iceberg orders there. These are orders that larger traders use to hide their size. So that's indicating 200 contracts executed. This indicates 135 contracts executed. So options traders were buying calls, selling puts, both lines going in the moving higher. Traders front running this liquidity right around 42.95, 42.94. Aggressive buyers start to come in. And then as price gets going, large traders start coming in again with iceberg orders to buy. That's shown also by the rising light blue line. And your price target, the price target for this initial move was 4,300. That was noted as resistance in the Spotgamma AM Founders Note. So when I'm trading, I'm looking at Bookmap on one screen and Spotgamma Hero on another screen, and combining what I see in both screens for setups. All right, so that's the setup that I wanted to highlight from this morning. All right, so there's no stopping the S&P 500 today, up above the 4,300 level, also the 430 call wall. And note this, what is certainly helping to drive this move higher is stop orders. That's shown by the rising yellow line. Also, this number right here, 11,591 contracts. Those are buy stop orders, helping to fuel the move higher. So definitely a stop fueled rally. All right, so let's take a look at the NASDAQ now. First of all, go to the NQ futures. Here's the reversal about the same time. right around VWAP, that's shown by this blue line there. Also the dashed blue line showing the upper daily expected move. All right, let's go take a look at Hero and see what options traders were doing in NASDAQ. Go to NASDAQ. Going to zoom in a bit. All right, so here's that 1015 setup. Same thing, traders taking Hero shifts from negative delta to positive delta. Price moves higher. Let's go back to Bookmap. And NASDAQ also continues to move higher. All right, Diego wants me to take a look at GLD. Yeah, I'll take a look at that in just a minute. So NASDAQ, very similar setup to ES. Let's take a look at one other thing. Go back to Hero. This is a new combined signal in Hero. This is the Magnificent Seven, just like the other two, the S&P 500 and NASDAQ. This is a combined signal. In this case, for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. This is a great new Hero signal, also showing reversal higher. Here there was a slight lead effect. Hero moves higher, and then the price, the combined price for those instruments, moves higher just a couple of minutes later. And if you trade NASDAQ, you can certainly look at this as well. And notice this is a pretty typical pattern. Is this activity aggressively taking positive delta positions, buying calls, selling puts? That continues often until somewhere between 11 a.m. and 1 p.m. and then can level off, and then price consolidates or moves lower. So that's a pretty strong indication that options traders are playing a big part in driving price action. All right, let's take a look at some stocks now. And Ethan says, sorry, didn't know Bookmap was a charting platform. I don't know what else you would call it. It's not a traditional charting platform for sure, but it is an order flow visualization platform. Maybe that may be a better term for it. All right, let's take a look at some stocks. And one I want to take a look at just to give an idea of maybe a swing trade. Let's start with Amazon here. This is maybe to zoom in on this chart just a little bit. This may be confusing because of these lines that I have drawn on this chart. I like to see the round number levels. This is for this week. That's the upper weekly expected move. This is the lower weekly expected move. And note Amazon is trading well above its upper weekly expected move. So one potential trade, maybe a swing trade, looking for some reversion to the mean, as Amazon has exceeded its upper weekly expected move by quite a bit, is to take a look at some form of a short setup at that point. Let's take a look at some additional information here. going to go to Equity Hub. This is Amazon. First of all, let me point out, let me zoom in on this chart. So I just want to give a different idea of how both Bookmap and Spotgamma can be used, as well as the larger time frame chart and whatever trading platform you want to use. So first of all, what this chart is showing is, this is from Equity Hub, Spotgamma Equity Hub. The red area put dominated, green area call dominated, and that pivot point is right at 136. So call dominated above 136. This is not a huge number, but it could come into play. The next expiry gamma percent, that could increase tomorrow. So around 22% of gamma is expiring tomorrow. So I know that traders probably have been buying calls all week, and most likely buying calls that expire at the end of the week. The top gamma expiry is Friday. So given the large move well above the upper weekly expected move, potential call gamma unwind on Friday, one way to play this would be to sell a call spread, buy a put spread, and just by doing that, you're saying that all Amazon has to do is stay below the certain level by whatever expiration you choose to trade. And another way to play that, if you really expect a strong move lower, would be to buy a put, or you could just sell Amazon shares. I think a more conservative approach, maybe a safer approach, is to sell a call spread or buy a put spread, and that way typically you have option skew in your favor. All right, so that's one idea. Let's go take a look at Bookmap now. So let's take a look at Amazon. All right, so Amazon is made a move lower this morning, and then chopping around between 137, 138, just around VWAP. Let's go take a look at Hero and see what options traders are doing in Amazon. So bearish in the morning, taking negative delta positions. Note the flow alert there. Note also the weak hero signal. What this is showing, this is comparing the hero signal for the last 30 days. That's shown by the entire length of the slider. Note the dot is on the lower end of the slider, very weak hero signal today. And then the colored portion is showing the hero signal for the last 5 days. So today the hero signal is the weakest that it has been in the last 5 days and the last 30 days. So that's a potential trade, kind of a swing trade, if you will, for just the next couple of days or maybe longer, depending on how you want to play it, or certainly for a short this morning. All right, let's take a look at some other stocks. So we know that Apple is reporting earnings after the close. So let's see what options traders are doing today, how they're positioning in Apple. Take a look at puts and calls. So for today, traders are buying puts. That's shown by the the falling blue line. Traders are buying puts. Notional value negative 127 million. And the call line, they are buying calls, but that is not significant compared to puts. That's 1.8 million. Sorry about that, nothing I did. All right, so this is how traders are positioning in Apple ahead of earnings this afternoon. They're buying puts. Let's just take a look at this next expiry. So this is showing options that expire in the next expiration, which would be tomorrow for Apple, and it looks like that is only a smaller portion of the total notion of value today. So traders are taking longer term trades in Apple today. All right, let's take a look at a couple of other stocks. And then Thiago, I will get to GLD. All right, the next one is AMD. So AMD up and down today. And AMD reported earnings let's see, that was on the 31st, so that was on Tuesday. All right, so up and down in AMD. So traders are buying puts in AMD. They are buying some calls. That was helping to drive price in the morning. Do this quickly. Note that that was helping to drive price higher in the morning. Call buyers took their foot off the gas, and price is now dropped and consolidating. Let's go take a look at Bookmap. So here's the move up in AMD as traders were buying calls in the morning, then consolidation as they took their foot off the gas. Let's take a look at Netflix now. Let's go to Hero, take a look at Netflix. All right, so traders have been more bullish in Netflix today. So they've been buying calls and selling puts. Go back to the total signal. Notice again this very similar, very typical pattern, pretty reliable pattern. This flow shuts off right around 11:10, 11:15, and price consolidates. So right around 10:10, 10:15, when the NASDAQ and S&P 500 started moving higher, Netflix moves higher as well. Note a floor alert in about the middle of that move higher. All right, let's go take a look at Bookmap. Go to Netflix. There it is. Here's that reversal higher, kind of a double bottom at 418. Traders started taking positive delta positions. Let's go back and take a look at Hero. And the only gamma level, spot gamma level in play for today for Netflix is the call wall at 430. All right, one more I wanted to take a look at, and then we'll take a look at GLD. The next one I wanted to take a look at is Tesla. Tesla's really been beat up lately, and today traders were in buying the dip. call buyers, shown by the rising orange line. So when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And note the very timely flow alert just a few minutes after the cash open. Let's go take a look at Bookmap. Go to Tesla. Overall, pretty choppy day, deeper pullbacks, but definitely bullish for Tesla today. And just a couple of days ago, it was trading below 200. Let's take a look at, I want to go back to this Thinkorswim chart, take a look at Tesla. So Tesla kind of just the opposite of Amazon. Earlier in the week, tested its lower weekly expected move. That's right at 196.73. And now Tesla has moved all the way up to its upper weekly expected move right here. So a swing trade, bullish swing trade for Tesla. Back to Bookmap. All right, let's take a look at GLD. Go back to Hero. Take a look at GLD. So definitely choppy price action in GLD today. So there you go, Thiago, up and down. Traders are buying calls and buying puts. Calls shown by the orange line, positive notional value, they're buying calls. They're also buying puts shown by the falling blue line and the negative notional value for the blue line. So we're overall pretty somewhat thin options trades in GLD compared to some of the primary stocks that I follow are the Magnificent Seven. All right, anyone else have any stocks they want me to take a look at? Otherwise, let's go back and check the S&P 500. All right, Frank asked to look at TTD. Not even sure what that is. Sorry, it's not available in Hero. The Hero signal is not available for every stock. It's available for most stocks that have more significant options volume, options trading. All right, so IWM, we'll take a look at that. So in IWM, traders are buying calls, buying puts. Yeah, so sorry, I understand IWM. I do trade IWM. All right, so there you go. Overall net negative hedging flow, options trades and hedging flow today for IWM. Let's go back to the S&P 500. Note this notional value is negative for the S&P 500 today. Options traders net are fading this move. Zoom in just a little bit. Let's see, check the 0 DTE, next expiry. So next expiry is a little bit over half of the total notion of value today. So the 0 DTE traders, this is for the S&P 500, for S&P 500, SPX, SPY, XSP, and ES futures. All those instruments have options that expire every day. So for stocks, the next expiry would be the Friday expiration, and for the S&P 500, this would be options that expire today. All right, so 0 DTE traders making up about half of the total, a little bit over half of the notional value today. That is significant. All right, so Crash F16 ask, maybe I missed it, but is the expected price moves you show for the stocks on TOS, are they available for ES and NQ? Yes, they are. Let's go back to that. Let's take a look at ES. 74.5 points today. Well above the upper weekly expected move. That's shown here. And Crash F16, unfortunately, this is not my indicator to give away. I got this from another organization. If you send me a direct message, just contact me by DM in Discord. I can point you to the organization where I got this. Right, and you can certainly calculate this on your own. Do a hand calculation every week, just like I do for the daily moves. You can do that for the weekly moves as well. Just get that from the options chain on Friday at the close. You can get the lower and upper weekly expected moves, and then just mark those on your chart, whatever chart you're using. So Slodazari asks, will this rally continue, or has all the put fuel gone? So maybe and yes. So I think the put fuel is mostly gone. Rally continue. Certainly looks like there's no sign of slowing down. Let's go back to Bookmap. Go to ES. So the S&P 500 still stuck around the SPY 430 call wall. And I pointed out today one of the key drivers of price has been these stop orders. Buy stop orders fueling the move higher. Stop fueled rally. Now I showed in the Vanna model that the put Vanna fuel is almost gone. We'll see if there's any more in the tank tomorrow. Let's take a look at VIX. VIX continues to drop from 22 now down to just around 16. So pretty substantial drop lower in VIX. So but just by looking at this, it appears that this is certainly the expected upper end of the range at 430 and at 4,300. Large traders are net for the day fading this move, shown by the negative iceberg orders there. Again, large traders often use iceberg orders to hide their size. And Bookmap with the MBO bundle, stops and icebergs indicators, can detect those, both the icebergs and stops. All right, so sorry, the first part of your question, will this rally continue? That has yet to be determined. And Thiago, you're welcome. And Shane, I already showed Tesla. We'll go back to Tesla. So in Tesla today, traders are buying calls. And Tesla moved from the lower weekly expected move to the upper weekly expected move in the last few days. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. I love these interactive sessions when you ask questions. It really helps. So again, thank you very much. Thanks for watching. Remember, Apple reports earnings after the close, then the jobs report tomorrow morning, and we will talk about it tomorrow afternoon. Thanks again. Bye.